the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. Hello and welcome to a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I am Prashant, with me, my colleagues Sonia and Surabhi. Good morning, guys.
Good morning.
I just have one thing to say. I was off for a week. What did you guys do?
Decided
to shake it up a little bit for you.
Forget about all that. I mean, welcome back, of course. There's
Sonia.
so much that's happened overnight, and you're like gone from heaven to hell, right? You were traveling?
I was traveling. I was in Orissa, and a wonderful state. And I mean, I'd heard a lot about it, so we wanted to go. And a short break, and we want to go back. So
we wanted to throw in, a little more masala when you come back. Till you left, we're talking rates, yields, dollar. Now we're talking bank failures, keeping it very active.
Oh, it happened that Friday, right? I mean, it's quite incredible. But there's already resolution. That's the thing,
that's
right?
the good thing,
So in three flat days, we've gone from crisis
to collapse
to a resolution. Hopefully a resolution, right?
Yeah.
So let's actually, for our viewers, put this out in some detail, because this is news. This has come in this morning, and a lot of you would be waking up to this. What has happened? Of course, Silicon Valley Bank and what has happened to it needs no fresh introduction. But this morning, Treasury, Federal Reserve, and the Federal Deposit Insurance Corporation, which is the depository in the US, have issued a joint statement. And they've basically announced measures which will protect all depositors of Silicon Valley Bank. This was the major concern. And this is important. All depositors is important because some depositors were already insured. So FIDC, the depository in the US, insures deposits up to $250,000. But the statement makes it clear that this is for all depositors, everyone at Silicon Valley Bank. So this is the latest. So the government has stepped in, as many were asking them to do so. And that is the fresh news this morning. As I was saying, the pace of this thing has been incredible, right? Last Wednesday, we had this bank run, right? The first of the news that we heard from Silicon Valley Bank came into prominence. On Friday, the company collapsed and it went into receivership. The government took over the bank. And this morning, we are basically looking at a possible resolution. That's how fast we say markets are fast. But in this case, I mean, what has happened has also been extremely quick-paced. So, just want to kind of highlight how we have done. Now, to kind of tell you the impact of all of this, right? I mean, how are US futures doing? The last I checked, you had the US stock futures, which was up about 1%. The S&P 500 futures, basically. The 10-year yield had sold off very aggressively on Friday, and that remains under pressure, which is a good thing. And the dollar is well behaved as well. The rates are on your screen right now. The dollar index at 104.3 and the 10-year US bond at 3.69 or so. The question is, on Friday, US markets sold off very aggressively. And this morning, we are waking up to US futures, which are higher. So, has Friday's mood and sentiment been completely put aside? Is that behind us and we need to look at the fresh cues? And I would say the answer is a resounding yes. The government has stepped in to save the bank. We'll see whether this is enough, what they've done is enough. There was a Treasury official in the US who basically said that there are similar issues at other regional banks. There could be similar issues at other regional banks, etc. as well. So is this all that is needed? I think time will tell. The bigger debate for markets and for us here in India is this. Does the Silicon Valley Bank issue derail the Fed from its inflation fighting track? What do I mean by that? Last Tuesday, we heard from Powell sounding all hawkish. Yields went through the roof. The 2-year was above 5%. And then this happens, which needs the government to step in. So from financial tightening, which markets were expecting, government stepping in and making depositors whole is, in a way, financial easing. Will the Fed really want to press the pedal and hike rates by 25, 50 basis points on 22nd of March, given what has happened? And I think the debate on this one is, it will be very much alive till we actually get the decision. The jobs number, which has been it came out on Friday, by the way. We would be starting the show usually with this. It was relatively uninformative, neither here nor there. It was strong, but it also had parts which were weak, which is a good thing. Tomorrow we get the CPI numbers, consumer price inflation numbers, and I think that in some way should give us some more idea about what the Fed will do. So, as I said, the debate is on. But I would say this, it is possible for authorities to step in to contain a particular situation without getting distracted from the larger objective, which is getting inflation under control. It's not as if this was a systemic issue. This was one bank mishandling its business, not managing its business properly. So it's isolated in that sense. This is not systemic. I heard things like Lehman, etc., thrown around over the weekend. I mean, this is not that. I think let's be very clear about that. The government has stepped in, contained the issue. Can they go ahead with their stated objective of bringing inflation under control? We will find out. Maybe, they won't do 50. Can they do 25? Sure, they can. Although there are already calls saying that they will back off. They won't do. They will let the situation settle and then do something in the next meeting, if so necessary. But this is the big debate. Now, let me quickly put out some levels for the market here, for the Nifty here. So the Nifty rallied from the low of 17,255 and retraced the 61.8% of the previous fall. It hit the 61.8% mark and then has retraced. We saw a bearish engulfing pattern, which is, as the name suggests, bearish. We've seen follow-up selling on Friday. It basically indicates a short-term reversal for the market. I'm not changing, the setup based on what has happened this morning. I'm just going by what the price action is telling us. There are resistances. If we do see a bit of a dip buying earlier on, SGX is indicating a flattish start. The resistance is at the 20-day moving average at about 17,664, and then the 40-day exponential moving average, which comes in at 17,747. So, those are levels that you need to be cognizant of. They're about 200, 300 points away. The SGX indicating a 20-point flat kind of start this morning. Sonia.
Absolutely. I think there's some semblance of sanity this morning, right? Yeah. After all that happened in the last 48 hours. And the US government stepping in and saying that no depositors will lose their money. Yeah. In fact, come Monday morning, all depositors will have access to their money. I think it's really brought about a lot of calm into most global markets. In fact, the Dow futures are also in the green, as we were pointing out earlier. But a couple of questions, right? Our own markets have been under pressure. So we're heading into this, we went into this event quite weak. So the big question is this: it may not be a contagion, it may be, but will it have any spillover impact on maybe the tech world globally, maybe the startup world? You never know. So that's the big question that we're going to be posing to our experts this morning. But for our own markets, just a couple of things. The short-term trend continues to be on the weaker side. So last week, the Nifty lost about 1%. It has closed below the 200-day moving average of 17,427. So this morning, although the SGX Nifty is indicating a flat start, do we sort of reclaim that 200-day moving average, given that the sentiment is on the weaker side? Only time will tell. The next support, a very, very firm support for the market, is a February low, which is about 17,255. So in that context, that continues to remain a firm line in the sand. Today, of course, there could be some volatility through the course of the day as we get a lot of headlines. For now, of course, the US regulator has approved that plan to backstop both depositors and financial institutions associated with Silicon Valley Bank. But we'll be getting, news flow through the course of the day. Just a couple of more things to watch out for. The US 2-year bond yield saw its biggest two-day drop since 2008. So there's a lot of impact that we're seeing on the bond market as well. And of course, Surbhi will talk in greater detail about that. But Treasury Secretary Janet Yellen has said, of course, the statements came before the government decided to step in. But, just a couple of things as we head into this week. One, of course, FIs continue to sell. So whether that whether that pattern continues is something that the street will watch out for. There was a large sell figure, over 2,000 crores of selling is what we saw on Friday. And Tuesday, Wednesday, we have two data points that come in. There's the US CPI data on Tuesday tomorrow. There's the US retail sales on Wednesday. And that will lead up to the FOMC meet on the 22nd of March. So a lot of data points coming through. Give and take everything, it looks like the start is going to be flat. The US government statements have sort of soothed nerves for now. Yeah. But this is still an evolving story, so there could be a lot of volatility perhaps.
Oh, absolutely. Take your point on that, Sonia. And I think that was a big talking point right through Saturday, that they have to get a grip on this very quickly. Yeah. Otherwise, there are issues. While it's not, it's the 16th largest bank, right, SVB in the US, 200 billion in assets. But the bigger question was that if people don't have access to deposits, how do you make payroll? The kind of sort of domino effect that plays out. So at least that seems to have stopped for now. Just a reference to the quote that you mentioned, of course, was before the
bailout. The government stepped in, yeah.
But I think we got an indication, right, when she made a reference to the 2008 financial crisis, saying, and I quote, "Let me be clear that during the financial crisis, there were investors and owners of systemic large banks that were bailed out, and the reforms have been put in place means that we're not doing that again." So that's the stated intent of the government. But let's see. By the way, crypto assets are rallying big time because of the bailout of the other bank. Right now, you've got a 9 to 10% gain on Ethereum, on Bitcoin. So it's all over the place in the crypto markets as well. The yield point is phenomenal. The 5-year yield, remember last week we were talking about how it's getting harder and harder above 5%. There's almost a 75 to 80 basis points drop from those levels on the US 2-year, beg your pardon, and the US 10-year continues to cool down as well. I just want to talk about how we sitting here in India are going to map this impact. Look at a company like Nazara. Now, we all know what Nazara announced over the weekend. The amount is not big at all. It's only about 64 crores for Nazara through 2 of their subsidiaries. But the fact is that there are interconnects, and the impact travels very, very quickly. So therefore, even here, I mean, I'm sure a lot of startup entrepreneurs and the entire ecosystem sitting out of Mumbai, Delhi, and Bengaluru will be watching the developments very, very carefully. We'll be speaking to Nazara as well as we go along. For the time being, it's very interesting. The SGX Nifty, let's pull up the SGX. It's actually not showing a massive drop whatsoever. So let's see if the Indian market can really take this in its stride, because we have a very definitive resolution, and whether the buyers are going to come in. So the SGX is actually taking it in its stride very, very well and fairly sanguine. That's just a 10-point drop. Not sure if that's how it plays out, but well, that's what the screen says.
Oh, by the way, the Oscars are on, guys. The Elephant Whisperer is won an award as well. I haven't watched it. I don't know if any of you have caught it, but I've heard it's an amazing story, and lots happening. So lots to celebrate on the Oscars front.
And Natu Natu, let's not forget. It's keeping the world grooving no matter what happens to the banks or to the yields.
Okay, well, lots to talk about, and through the course of the next 2.5 hours, we'll be doing just that. For now, there's some semblance of sanity and absolutely flat on the SGX Nifty. But on the equities front, we have a comment coming in from Alexander Redman of CLSA, who says that Silicon Valley Bank's collapse represents the first major victim of the tightening cycle and raises concerns about unrealized losses on fixed income securities held by US financial companies. He says increased balance sheet caution may suppress the US loan extension, pushing the credit impulse deeper into negative territory, consistent with negative momentum for US equities. He also says the direct implications for emerging markets are limited to a number of Chinese and Indian startups banking with SVB. He adds indirectly the greater impact will be from elevated risk premium as the market digests the fallout of SVB. He retains the S&P 500 year-end target at 4,000 and reiterates the outperformance call for emerging market equities.
Well, some money market views now. On the rupee, B. Prasanna of ICICI Bank says financial stress in the US due to a bank failure and the mixed jobs report led to significant risk off in global markets, leading to lower dollar yields and lower terminal rate pricing. As a result, the dollar retreated against Asian currencies, while the rupee, though benefited by seasonal inflows and improved current account deficit outlook, which was largely range-bound due to RBI and OMC's buying dollars. He says this week currencies will take cue from US CPI print. He expects the dollar rupee to trade between 81.6 to 82.6 to a dollar range.
Okay, let's talk about the bonds. On bonds, B. Prasanna of ICICI Bank says global bond yields moved sharply lower last week owing to the risk-off sentiment and a break in robust economic prints. Back home, local yields also eased with the flattening bias as duration remained the flavor. Prasanna expects positive momentum to continue with the 10-year benchmark trading in a band of 7.3 to 7.5%. Okay, well, we have a lot of stock-specific action to track today as well, and big headlines there. We will get to it in just a minute. In our top 10 segment, we're looking at the Adani group of stocks, at Tech Mahindra, Sona BLW Precision, Lupin, Godrej Properties, ICICI Lombard, and Hindustan Aeronautics. Those are stocks on our radar on the back of positive news flow. Infosys, IndusInd Bank, and Mahindra CIE on the red side today, and we'll tell you why in just a bit.
All right. Well, our global guests are with us. Rupal Bhansali is Chief Investment Officer, International and Global Equities at Ariel Investments. We also have Ed Yardini, President at Yardini Research, joining in now to take some questions. Good to have both of you here. Thanks very much for your time. Rupal, if I can start by asking you 2 questions. One, the announcement of the US government to step in to protect depositors, is that enough? Will we see more in terms of contagion, spillover, or is this now contained? And second, will this force the Fed to back off from their rate hiking program? Go on.
So first, I think the contagion certainly has been contained, but I think regulations will increase on the regional banks. One of the exceptional attributes of the US banking system is that the regional banks did not have to adopt Basel III, while European banks and most international banks have adopted Basel III, which requires them to have a net stable funding ratio. That was the crux of the issue that Signature Bank and SVB faced, and that's why they had to be bailed out. So I think the contagion has been contained with the announcement of the depositor backstop that we all just heard about. That said, don't forget, equity investors got wiped out and bondholders are going to take some losses. So there will be some fallout on the markets and risk assets will get repriced, as they should.
Okay,
to your question on whether the Fed is going to pause based on this development, I don't think so. I think inflation and the economy are more their concerns. This bailout is rather limited in scope and has been dealt with rather quickly. So I'm hopeful that the Fed keeps eyes on their mission, which is bringing inflation down.
Okay, got it. So you're saying that the contagion will be contained, but there will be some fallout on, risky assets like equities because of the losses that bondholders have to face. Ed Yardeni is also with us. Mr. Yardeni, your thoughts? Is there any kind of systemic risk to the global financial markets because of what transpired in the last 48 hours?
Yeah, the problem with the financial stability is we never really have a full understanding of how unstable it is until something blows up. I think that the SVB example reminds us that a lot of deposits are not insured by the FDIC, and that's the problem. I think a lot of depositors, big depositors, certainly forgot that when they were dealing with SVB, and so the Fed did have to come in and provide this backstop, this support. But the problem is still out there. I mean, it's conceivable that we would have another run on another bank, but I think to the extent that the Fed and the FDIC just managed to provide this backstop, I think there's now an implicit perception that any other big bank that has this problem will be bailed out after they fire the management and after they wipe out the investors. So things have changed, but I agree that the regulatory environment and the regional banks needs to be tightened up.
Okay, got that. The thing is, we keep getting new terms every time there's a new crisis or a new failure. This time we have what's called a new bank term funding program, which is sort of, it's supposed to provide immediate liquidity to any institution affected by these bailouts. So the technical terms, we just don't know. Right now, we're being told that taxpayer dollars are not being used for this. But Mr. Yardeni, I think the market will have the central question on its mind that does it end with Signature Bank and with SVB, or could there be more? What's your sense?
Certainly could be more, and that'll be the concern. But I think the Federal Reserve is going to be somewhat less aggressive here in its tightening. Remember, they wanted to get the Fed funds rate to a restrictive level, not one that kills the economy, not one that destroys the banking system. They wanted to get it up to a restrictive level and then keep it there. I think they're pretty close. I mean, I suppose just for them to show that they aren't too concerned about financial stability, they might go for 25 basis points. I highly doubt they'll go for 50 basis points. Then again, they know more than we know, and it may be that they've concluded that no increase is justified, and they'll say, until things calm down and we sort them out, we're going to leave the Fed funds rate where it is. But again, 25 basis points more isn't going to make a big difference. We still have an inverted yield curve, which in some ways is a trouble for the banks because it means that people can leave deposits and get better returns in treasuries. And once people figure that out, if you have more of them doing it, it could really be a real problem for the banks and the Fed. The Fed knows that.
By the way, in the last 5 minutes or 6 minutes, the dollar index has sold off aggressively. I mean, you rarely see, a broader dollar gauge move like this, but it is. I don't know if you can pull this up, put this up. We were at, when we started, right? I mean, we were at about 104.3, 104.4. It's still there. Maybe we can refresh it. What I'm seeing is about 103.89 in the last 5 or 10 minutes or so of trade will reflect that. But this is a large reaction coming through. Rupal, and this may have to do with the fact that, of course, I mean, the policy measures which we heard, but Goldman Sachs, right, one of the biggest investment banks, saying that they've removed their call for a 25 basis point hike on the 22nd of March. They say the Fed won't do it. So I don't know if you want to react. You've already said you don't think it'll get the Fed off the inflation fighting track, but maybe for the next meeting, they may back off. Possible?
Sure, look, but I think that's a very short-term sort of point of view, because ultimately markets discount, the long-term future, not just a couple of weeks or months ahead. And I think the thing to watch out for is, are rates in positive territory or are real rates in negative territory? We are still squarely in negative territory. So either inflation comes down or rates continue to go up. That's the challenge. So I think it's much more to do with what is going to happen to inflation, not what's going to happen to SVB Bank or Signature Bank or other sort of asset classes and moves, including the currency. It's really our take and view on inflation. And frankly, living in the US, and I understand it's anecdotal, but nonetheless, it does not feel like inflation is coming off a boil. And I think that's problematic for markets. They have viewed the glass as half full. I would argue it could well be half empty, which is that rates stay higher for longer, which is, in my opinion, the way Powell and other Fed board members are trying to broadcast their views, and the market refuses to listen.
Rupal, I remember when you were here in Mumbai in our studio, right? We were having this chat about how it's perhaps not a good time to be in risky assets like equities this year, and it's just showing up through the course of the year. Is that your stance even now, that even if this situation gets resolved, of course, now there is a backstop that has been provided for depositors, etc. But who is to say that some more of these situations don't arise through the course of the year? What do you do with risky assets like equities? Are you cautious now? Would you raise cash levels, especially for emerging markets like India?
Well, two things. Look, cash has become a genuine alternative to all other asset classes because it is yielding a very high rate of return in the short run. So I think TINA, which was there is no alternative, has turned into TIAN. There is an alternative now, and it's really called fixed income. The second point is any asset class that is exposed to high levels of leverage risk and liquidity risk are going to be vulnerable in a world of QT. So I don't think we should rush for the exits from equity markets and put all the money under a mattress or frankly in a bank and get some interest on it. I think it's about curating your portfolio to be cash flow generative as opposed to cash burning. And the biggest way in which cash flows come back to shareholders is through dividends. So I recommended before, and I continue to believe that a high dividend yielding strategy is the way to approach equity investing. Dividends have tended to account for half the total return of the long-run stock market's performance, that we all count on. In the last decade, it has predominantly come from capital appreciation. I think in the next decade, it's come from dividends. So it's about repositioning portfolios with an eye towards defensiveness and dividends, not giving up.
Okay, got that, Rupal. Mr. Yardeni, I remember in 2008, we spent many months debating this whole decoupling theory. Now, we're nowhere close to 2008, and I hope we don't get there. But what is your sense? Till the US sorts itself out, whether it's the real economy or recession, rates, or some of these financial institutions, will money keep flowing to EMs? How would you look at a market like India, for instance, against this backdrop?
I think that obviously there are global investors that diversify around the world. And I think many of them are starting to conclude that India may be the beneficiary of some of the geopolitical changes going on. And I think they will probably overweight India relative to some other markets like China, for example, which has already had a big rally, but presents all sorts of geopolitical challenges. Then there's the issue of the dollar. And I think that a weaker dollar is clearly good for emerging markets. And we may see that because of this SVB situation, the Fed is less aggressive from here. They tone down their hawkishness, and the dollar weakens somewhat, and that should be good for emerging markets.
All right. Ed and Rupal, thank you so much for joining us and giving us an update on how you would approach this entire crisis. So for now, things are contained. The fire has been doused by the US government, at least at the moment. But let's see how things transpire from here. There are definitely losses in the bond market that one would have to react to. But let's do one thing. We'll be getting you a lot of opinion through the course of the day. So let's take a quick break for now. On the other side of the break, we also have a stock market to trade this morning. Plenty of stocks to watch out for. We'll be back in just minutes from now. All right, big win coming in for India. RRR's Natu Natu has won the Oscar for the best original song. I think it was predestined, this win, right? Everyone was expecting it, but now it's finally come through. So big congratulations. And there was a lot of competition. There were beautiful songs, especially from, the movie Everything Everywhere All at Once, which has won so many accolades. There was a song in competition with Natu Natu. But I guess... may the best man win, and the best man has won.
See, Sonia, it's whether it's bank failures or issue with global economy or it's the movies, you dance to India's tunes. I think that's what this win tells us, right?
So when are you doing the dance, Prashant?
It's a hint. It's a hint, Prashant.
I haven't ever seen you dance. I thought, you might as well start with an Oscar-winning number, right?
I can't dance to save my life. So I think I'll... and that was an incredible performance. I mean, I saw the movie and just
I saw the dance steps.
It's just incredible. Just incredible. All right, let's get down to stocks, right? And tell you the top stocks that Team CNBC-TV18 is watching out for. Now, let's go. Our team is standing by. Let's go across to Vivek first, who's got all the action and the lowdown on what's happened with the Adani Group stocks. Good morning, guys. Vivek, good morning.
Well, good morning. An important development coming in from the Adani Group. So in a statement last evening, they've actually said that the group has fully prepaid all of the share-back promoter financing that they had earlier taken. Also, what they're saying is that they've concluded the full repayment of the margin-linked share-back financing, and they've gone ahead and increased equity in the Ambuja financing by prepaying a $500 million US dollar as commitment to reduce the sponsor level pledge. So $2.15 billion US is what is the complete full prepayment of the margin-linked share-back financing loans, and the Ambuja loan facility that they have taken, that too they have prepaid. So the entire prepayment program that the company had earlier stated of $2.65 billion US has been completed, and the company says it's been done in the last 6 weeks. March 8, 2023, remember we had reported that the company had prepaid almost 7,374 crores. So it's a positive development as far as the Adani Group stocks are concerned, and clearly, the share-back financing is definitely coming down.
Okay, thanks a lot, Vivek, for that. So let's see, there could be some relief rally on many of the Adani Group stocks. But Tech Mahindra is in focus. The company has made a new appointment, Mohit Joshi as MD and CEO for 5 years. Rima's here to give us the latest on that. Rima, over to you.
Hi, thanks so much for that. So finally, the uncertainty, the speculation ends. Tech Mahindra has appointed Mohit Joshi as the MD and the CEO. He will take over from CP Gurnani in December of 2023, and he is appointed as the MD and CEO for a period of 5 years. Mohit Joshi has a very strong pedigree. He joins after spending more than 20 years in Infosys, where he was the president, which means one step below the CEO, and he was the president of BFSI and healthcare. These are two large verticals. They contribute over a third of Infosys revenues. He also had executive responsibility across all the large deals for Infosys. Also, it's quite interesting, I was speaking to a lot of analysts over the weekend, and they're saying that this appointment, the choice of Mohit Joshi, who was heading enterprises, for Infosys, is interesting because it marks a step away from Tech Mahindra's historical focus on telecom into the other segments, the non-telecom verticals, which they call enterprises. On the flip side, this is a big positive for Tech Mahindra. Strong pedigree, but he has his task cut out because Tech Mahindra has been an underperformer and he needs to reverse it. But on the flip side, this is negative for Infosys because in a span of the last few months, they've lost two presidents. As I said, presidents is one designation below the CEO. One of them was Ravi Kumar, who joined as the CEO of Cognizant, and now they've lost Mohit Joshi to Tech Mahindra. So this is quite a big blow for Infosys as well. So they will need some big shoes to fill those gaps. Back to you.
Got that, Rima. Point well taken. So big news coming in for Tech Mahindra. Speaking of appointments, well, we got to know over the weekend that Mr. Sumant Katpalia is getting the extension, but not as long as perhaps what they had applied for. Abhishek, good morning. Tell us more.
Well, good morning, Surbi. So it's a long overdue news which has now come in. So RBI has granted 2 years extension to Mr. Sumant Katpalia as the MD and CEO of IndusInd Bank. His original term was to end on 23rd March 2023, which has now been extended by 2 years. The board had, however, asked for a 3 years extension of the same. So this is not the first time, we are seeing a shorter duration than what the board has sought. It happened with Federal Bank as well. So brokerages have written on IndusInd Bank. The move from RBI comes as a negative surprise, which is the duration is shorter than what was sought for. However, this is not the first time, case in point being Federal Bank, as I mentioned earlier. There has been no reason provided with respect to any operational concerns by RBI on IndusInd Bank. So valuations are on the cheaper side. The price to book value around 1.2, 1.4 times is cheaper, given the fact that fundamentals are strong. So they say that one can use this correction to add further, as there is no fundamental risk to the bank. However, we have JP Morgan, who has downgraded the stock to neutral from overweight. They have cut down their target price massively to 1,060 from 1,400 earlier. We also have Jefferies, who have cut down the target price by 50 rupees to 1,550. Other brokerages like Macquarie, Citi, Morgan Stanley and Motilal Oswal all remain bullish and have a target price ranging from 1,420 to as high as 1,525. Back to you.
All right, thanks a lot for that. So extension coming in from Sumant Katpalia for 2 years. But Vivek is joining in now. He has some updates on what's happening in the auto space. Mahindra CI in focus. M&M could be selling stake there. Vivek, over to you.
Well, good morning. Absolutely right. The auto tank space will remain in focus. Some significant block deals are expected to happen. So what we understand from our sources, first we'll understand what's going to happen as far as Mahindra CI is concerned. Remember, it's part of the stated ambition of the group to reduce their stake in that particular venture. So we understand that in today's trading session, in the block deal window, M&M is likely to sell 4.6% stake in the company. This is going to be via the block deal window. And there is an option to upsize as far as this particular trade is concerned. The floor price for this particular block is at 355 rupees a share, and the base size of the deal is around 615 crores. Now, after today's block deal, there is a 60-day lockup as far as further sale of shares is concerned. And at the end of December quarter, M&M held 9.25% stake in the company. So again, there will remain the overhang of further stake sale. Now, when it comes to Sona BLW, Precision Forging, that's a very large block deal that's expected to happen in today's trading session. Blackstone is expected to sell, almost 20.5% stake in the company via the block deal window. It's a cleanup trade, so after today's block deal, there will be no further stake left. And they held stake in this particular company via an entity called as Singapore 7 Topco 3. So after today's trade, the overhang removes, and we understand from our sources that the demand for this particular block is quite strong.
It's a large block that we prepared for, Vivek. Thank you for sounding us out. 20% equity expected to change hands at Sona BLW. Ekta, good morning. You have more stocks in news?
Well, yes, and all the stocks that I'm tracking are expected to probably be in the green today. ICICI Lombard, where ICICI Bank has got till September 2024 to pare stake to 30% from 48%. Lupin, USFT has completed an inspection of their Vizag facility with zero observations, so I expect the stock to be in the green. Godrej Properties has acquired a land parcel in Bangalore, which is of approximately 28 acres. It's going to be a mixed-use project of apartments as well as supporting retail development. It is located near Whitefield. It is in close proximity to major office spaces as well in Whitefield as well as the Outer Ring Road. So it is a prime piece of land that they've acquired. And HAL has signed a 667 crore contract to supply 6 Dornier 228 aircrafts to the Indian Air Force. Expect all of these stocks to probably be in the green today.
All right, Ekta, thanks a lot for that. In case you missed out on any of the stocks, a lot of news flow this morning. There's the Adani Group stocks on the prepayment of their debt. Tech Mahindra, Sona BLW, Lupin, Godrej Properties, ICICI Lombard and Hindustan Aeronautics. While stocks with negative news flow, there's Infosys, IndusInd Bank and Mahindra CI Automotive as well. But
right, just before Sonia, we get to Manisha and commodities, just a quick word on the dollar index, which I was referring to. I think we can put that up, and the dollar index is now at 103.89. When we started, we were at about 104.3, 104.4, and there has been a sharp repricing lower in the dollar index, and this is important in a positive way for emerging markets and for for India as well in terms of markets and everything. I mean, commodities. You want the dollar lower, nor not higher. And this is what I was saying over the weekend as well. That the fact that even through the course of this collapse, the SVB collapse, etc. It's not as if the dollar moved up sharply.
Yeah.
Usually when there is risk off, money goes home, and home is US dollar. But the dollar did not rise. The dollar was actually flat to even slightly lower. So while equities did panic, I mean, bond markets, not the treasuries, I mean, because there was the Fed impact as well, but bank bonds, etc. in the US, the US dollar, broad gauges of risk. I mean, they did not panic at all. So you got the dollar index lower, which is a good thing. The SGX, I think Nifty we should probably put that up. It's picked up a little bit more. It's not showing up in any large way. I think 40, 50 odd points, but it's a little bit of a pickup from when we started.
Also, today will be an interesting day. Not just the SGX Nifty, most Asian markets are trending much higher now. I mean, Hong Kong, just pull up the Hong Kong market for you. There's a massive recovery that we're seeing there, almost 300 points higher on Hong Kong. And the Dow futures, which of course won't come up for you on your screen, but the Dow futures are indicating a bright shade of green. So it'll be very interesting to see how our day shapes up, given all of the news flow. But there's a lot of volatility in the world of crude as well. Brent is back above $83 a barrel now after the strong US payrolls data that came through. Manisha Gupta is joining in to give us a roundup of all the action there. Manisha, good morning.
Thank you for that, Sonia. Well, yes, as we were discussing about the dollar index, and the decline for that has really supported across commodities as a sector. We're looking at green across here. So even as the dollar index did decline 4% on the previous week, we've seen the payrolls data come in slightly higher. That has been supportive. The dollar index coming off recent highs has been supportive. And the U.S. banking crisis perhaps could push the Fed into softening the hawkish stance. That's what the markets really are factoring in right now. But more importantly, it's going to be the U.S. CPI data that comes in on Tuesday, and that is going to be the most watched ahead of the US Fed meeting, which is on 22nd of March. We are looking at stronger metal prices also, whether it's copper, which is trading nearly a percentage point higher. You have steel at an 8-month high, iron ore prices at 7-month highs, gold trading at a 4-week high. So almost everything trading in the positive right now, with buy calls coming across sector.
Oh, yes, everything's positive. Crypto, equities around the world, US futures. I guess markets around the world pretty much believe that they've got a handle on this, that they've got it contained, and we don't hear more of such sort of unwarranted, ugly episodes.
I remember somebody, I think it was Paul Schluter, one of the global guests we have on the program, last year was saying that at some point we will get some kind of a financial accident, because it's not where interest rates in the US are, it's the pace at which they've gone up from 0 to 5%, right? I mean, the market interest rates in terms of US 2-year, etc. So maybe this is that accident, and it's not systemic, it's not Lehman, it's not Bear Stearns. I mean, people are throwing around those terms so liberally. Those were systemically large, important institutions, and the numbers are hundreds of billions of dollars. But in terms of a percentage of the U.S. banking system, I mean, it's a small one, and looks like the government has kind of stepped in.
I think that response has made all the difference, literally, the manner in which, the pace at which they've come together, the Treasury and the Fed, to try and put a backstop to this. Well, let's take a very quick break on that note. We'll come back on the other side, and we have a couple of corporate conversations lined up for you as well. We'll be chatting with the management of Gokul Das Exports. Welcome back. So we're expecting a recovery to play out on the market. In the meantime, let's get a couple of interesting corporate conversations going. Gokul Das Exports is the first corporate on our radar, and we're speaking to the company after the promoter entity, Clear Wealth Consultancy Services, sold around 10% of its stake via a block deal last week. Just to alert our viewers, Clear Wealth has been selling stake in the company quite regularly ever since September 2020. Their stake is now down from about 33% to just under 11%. Siva Ramakrishnan Ganapati, MD at Gokul Das Exports, is with us to talk about the company's plans going ahead. Mr. Ganapati, thanks very much for taking this quick call. Before we get to the business, just want to get an understanding of the company's ownership now. So Clearwealth's stake comes down to about 10-odd%. Can you tell us what's the intent? Are they going to look at a complete exit? Will the company continue to be run as a widely held entity?
The company has always been run as a widely held company. It's professionally managed, governed by the board, and run by the management team in accordance with all the strictest governance principles. The call of the investors is an investor call, and they have to explain for it. But at the moment, from a company's perspective, strategy, its own competitive positioning, etc., nothing changes. The company continues to do what it has been doing, and it will continue to look for growth and will continue its business as usual.
Mr. Ganpati, good morning. Just a couple of more clarifications. Will Clearwealth be selling out any more stake? What would the eventual plan be?
At the moment, that's not on the anvil. They're still a promoter group, so they will have to remain on board. But then at the end of the day, that's their call as to what they do in the long term. But for now, I don't think there is any intent to do any more sale.
Mr. Ganpati, hi, good morning. Prashant here.
Good morning.
Is this,
Yes.
so how much do promoters own? The Florentry, I think still owns 10%, right?
That's correct. Clearwealth is the SPV through which they hold the stake. So that's the 11% that they hold.
Right, and that is Matthew Syriac's fund, right?
That's correct.
Have you spoken with him about, I mean, it's a large percentage of chunk coming to the market. What was the motivation behind it? Sorry, yeah.
We speak all the time. I mean, that they have their financial motivation. So if they have to take their own calls as a fund, they will need to invest in other opportunities as well. So it's just that it's purely financial, nothing to do with Gokuldas as a business or anything like that. They still own own a good chunk of the company.
But it's a relative 10%, right? 10% is what they own now, and that's the single largest block. Right?
That's correct. That's correct.
But does it reflect in any way, in your opinion, on the business attractiveness changing in any way?
Not at all. Not at all. Absolutely not at all. I mean, business attractiveness continues as usual.
Mr. Ganpati, what happens to management personnel? Any further changes?
Nothing.
Any change that we should watch out for?
Nothing. It continues as usual. The management is incented to run the company, and management has equity, stock options, etc. So there's nothing, no change expected in management or anything of that sort.
Are there talks of any other strategic partner, financial or strategic investor coming on board in Gokuldas Exports over the next, say, 1 year or so?
No.
Okay. What about growth plans? You were telling us that, your focus continues to be on growth, whether Clearwealth sells or not. What kind of growth are you looking at, say, in FY24, if you can give us some demand trends?
So FY24 is going to be a very interesting year, of all the years, because after a strong growth, we are at this moment rating at around 25% growth over FY22 into FY23. So on top of a strong growth, we, to perform yet another strong growth may be slightly difficult given the market conditions. However, if the market conditions improve, then, things can change on a dime. The reason I'm saying that is because the Western market, and we are particularly heavily leaning towards the US market, it's anybody's guess how the market pans out. Interestingly, the consumer sentiment seems to be strong, the purchases seem to be going good, etc. But then everyone is fearful of a mild recession, so we will have to see how it goes.
Sure. When you say strong growth, can you quantify that for us very quickly? Because I think in FY23 you managed to do about 23% growth. Will it be better than that in FY24?
No. I think on top of the 23% growth, I don't think we can deliver that kind of a growth in FY24. We will target a growth for sure, but then that would be a very high percentage. Having said that, going forward, we will continue back our journey, because I feel that from FY25 onwards, things should start strong. In my opinion, second half of FY24 itself, we should start seeing good growth.
But you'll end at 2,300 odd crores for FY23, which was the target?
Our target was between 2,200 and 2,300. I think we are gunning in that band itself.
Very briefly, Mr. Ganpati, Mr. Syriac's investment and you taking the reins of the company is widely credited as being the turnaround sort of trigger. You were there at the helm, right? I mean, you're not going.
Yes. Yes, of course.
How much do you own, sir, in the company?
So I have ESOPs in the company. I have substantial ESOPs in the company.
All right. And Mr. Ganpati, just one last question. There is some buzz that Gokuldas is looking at doing an acquisition, a meaningful acquisition. Can you tell us anything?
I cannot comment on anything at this moment. I don't know where you're catching this buzz from, so I wouldn't comment on that.
Okay, all right, Mr. Ganpati, thank you very much. Good speaking with you. Appreciate you joining in, and thanks very much for speaking with us here at CNBC TV18. We'll take a break here. We are back. Prakash Diwan will be with us for some fundamental stock analysis on the other side.
Welcome back to Bazaar Morning Call. Just before we get some opinion for you, let's take a quick check on what's happening with the SGX Nifty. There's a big reversal that has come through this morning. So, a lot of relief as the regulators, US regulators have announced that backstop of SVB depositors and ensured that depositors will not lose any money. Most markets, global markets, including the SGX Nifty, now well in the green. So we'll do one thing. We'll take a short commercial break. We'll come back. We'll have the pre-opening rates kicking in. Also, we'll get Prakash Diwan for some fundamental stock analysis. Mitesh Thakkar and Sudarshan Sukhani will join in for some trading strategies as well. Stay tuned.